Hello, welcome to title insurance. We'll get started with some basics about title insurance. Hopefully many of you know what title insurance is, but if you don't, maybe you'll have a better understanding after this afternoon. If I can get the next screen to come up. Okay, what is title insurance? Title insurance is insurance against defects in the title that have already occurred but are not yet known. That means that it protects against items that have occurred prior to taking ownership of the property. So once someone closes on a property, any defect that occurs at that point forward is not covered. It only covers defects that occurred prior to closing, like I just mentioned, and these defects may be against the property or the property owner. What does title insurance cover? It covers claims made as a result of improper indexing in the county records, as well as claims caused by misliens, judgments, mortgages of record, and claims made by missing heirs, claims resulting from forgery or fraud. Oops. As well as many other examples. There are 55 reasons to buy title insurance, which is included in everyone's sales packages in their offices. Which there's an example of that. All right, what is marketable versus insurable title? Hopefully many of you have read your sales contracts. In the standard South Carolina state contract, paragraph 3 covers that our contracts require marketable title, not just insurable title. Marketable is better than insurable. Marketable means that it is title that a normal person would be happy to accept. Insurable means that there are defects that have coverage to protect you against those defects, but you could still suffer some kind of inconvenience or loss. So in our standard contract, marketable is covered, and that is the better form. However, keep in mind that many bank-owned or corporate contracts do not have that same language. And in our market today, we have so many REO and foreclosure properties that they often require you to use their own forms. So be aware of that. The buyer should understand. It's often not really a problem, but the buyer needs to know the difference and understand that they may not be getting perfect title. The other issue that comes up is whether or not there's a general warranty deed or limited warranty deed or special warranty deed. You see frequently on any bank-owned property that they will only give you a limited warranty or special warranty deed. That's just because they're not going to guarantee anything that occurred prior to them taking ownership of the property. It's standard. It doesn't mean there's anything really wrong, but it's something you should always advise your buyer to get legal opinion, legal advice from their attorney. Real life examples. There was one of our agents had a relative in Atlanta a couple years ago, and they were purchasing a home, and in Atlanta they do not have in their contracts marketable title. It only says insurable title. And at that time, that house had a sewer line running through the property directly underneath the home. That was a major concern, because if anything ever happened to that sewer line, then the Public Works utility company had the right to go in and basically bulldoze through the house to fix that line. The defect was insurable. In other words, there was a title insurance company already on the hook, and they were willing to insure over that defect. But it was still a problem in that the buyer could ultimately lose that home and have to rebuild it, and it was a scary situation. So that's a good example of marketable versus insurable. Another situation was a tax sale property which sold without ever having the title cleared through a quiet title action. That happened to an agent in my office, West Ashley. She had a client who purchased the property from a developer. as far as they knew, everything was perfectly fine. Several years later, they went to sell that property and were told by the buyer's closing attorney that they had a title defect, that they did not have clear title to the home because the developer bought the property at tax sale and never did an action to quiet the title. All of that was basically a result of the first closing attorney having a different opinion than the majority of closing attorneys in Charleston, who all basically agreed that the title was not clear. So as a result, that poor seller ended up losing a sale and many thousands of dollars on that transaction. So it's something to keep in mind with tax sales. Title insurance benefits for the owner. It gives you coverage to protect your client's equity against unforeseen. Examples would be, well, in a second here. Closing attorneys should always check IDs to verify the identity of the people at the closing, the sellers. Undisclosed heirs can be a problem when they resurface in the future and claim ownership of that property. As well as deeds by persons apparently single but actually married. Some examples would be not too long ago in Mount Pleasant, there was a couple that went to closing. They were the sellers. The attorney asked for the ID of both the husband and wife. The wife did not have her ID with her. The attorney would not finalize the closing until she produced an ID, so she left and was going to return with it. The interesting part was when she returned, it was a different person. So if they had closed with that first person there without the ID, that would have been a title defect. Another example, there was a commercial property on Highway 17 in Mount Pleasant several years ago, and the property was sold to an investor with a quitclaim deed. The investor was planning on building an office complex on the property, and it was an expensive transaction. The issue came about when heirs later surfaced claiming that they owned that land and never agreed to sell it, because there was a great-grandfather who passed away and they never probated his estate, and one of the heirs who had claimed ownership of it sold it to an investor, a lady, who then sold it to this current owner. But they never finalized the estate. They never dealt with the undisclosed heirs. The result of that was the new owner of the property didn't really own it, and I believe they settled and that they had to pay out a lot of money to the heirs to get the title cleared, but it was a big issue. Quitclaim deed is when someone is conveying whatever interest that they have. They're not saying that they have complete title to the property, but they are saying whatever interest that they may or may not have that they will sell to you. So they're not selling you a whole lot when they give you a quitclaim deed. There's another scenario where a couple filed a false deed at the RMC. They fraudulently pretended to purchase a property. The problem was that the seller never knew about the transaction. It was actually, this was a deal handled by Rusty Bennett, and he used to do a lot of real estate closings in the James Island, well, Charleston area in general. But Rusty realized when he did the title search there was something not right about that deed. They reported it to the FBI. They ended up doing a sting. The sellers were arrested at the closing table or immediately after closing. You had the pretend seller who really did not own the property. And they went to jail, I believe. But again, that's the kind of thing that title insurance would protect against, because there's no way for the attorney to know absolutely that that deed was a forgery. A lot of attorneys might have closed it, never realizing there was something wrong with that deed. Rusty happened to pick up on something, I'm not sure what it was, that alerted him that something wasn't quite right. But the buyers were fortunate that Rusty did discover that. Many people say, well, the attorney has insurance to cover them if they make a mistake, so why would I buy title insurance? Well, title insurance covers things that typically the attorney cannot discover. Oftentimes, title problems are not the fault of the attorney. They're items that like forgeries, that there's no way the attorney would know that it was a forgery necessarily. They don't really have a way to detect that. Also, E&O insurance doesn't normally cover items that would be considered fraud. So if the attorney intentionally was committing fraud, the E&O insurance would not cover them. Title insurance would protect the buyer in that transaction. Or the attorney may simply pass away or go out of business, move out of state, disappear, and it would make it difficult to file a claim against them. Real life examples, again, we had a closing attorney in the West Ashley area several years back who was handling many closings, and he apparently got into some personal financial trouble and started collecting from the sellers proceeds to pay off their loans, like every attorney would. The problem resulted from him not paying off the loans. The closing attorney ended up pocketing the cash and was living off of it. So when you would have a closing there, the buyer would pay the seller, and typically the attorney would take out of the seller's money the amount necessary to pay off the loan, and everything's good. Except this attorney never mailed in those payoffs. Instead, he was making payments on those loans until he could no longer keep up with those payments. And he ended up going down in a big way. He was disbarred. He lost his license to practice law. And he ended up committing suicide. But there were a lot of people affected, including a couple of clients from our office who were affected by it. Title insurance would protect against that, and that in our case, our sellers ended up being made whole. They were protected, but the title insurance guarantees that those funds are going to be handled properly. They have to give an insured closing letter prior to closing where there is a guarantee that the funds are going to be protected. So that would have covered that kind of situation. Reissue credit. Reissue credit is a perk, something that we can provide our buyer clients when we handle closings or title insurance with closings. The reissue credit is simply a discount up to 50% of the title insurance premium. And it's just a way for us to give them something back. Again, it can reduce the title insurance up to 50%. Minimum title insurance premium start at $100. So the minimum savings with reissue credit typically would be at least $50, but it could be substantially higher. The larger transactions, I've seen reissue credits over $1,000. They also can qualify for reduced title searches, which would save with the closing attorney's title abstract fees. That can be reduced as much as 50% as well. We also provide a $50 title insurance reissue credit reward. That is available if you help us obtain a copy of the previous policy. Turn that into your office administrator. Let them know that you're looking for that $50 reward and who you want it paid to. That's coming up. The $50 reward is available for either a seller if you need a little incentive to get them to help you find their previous policy, or the listing agent, or yourself. Or you can give it to the buyer if you'd like. What's required to be eligible for reissue credit? You must have a copy of the previous title policy. It can be an owner's or a lender's policy, it doesn't matter. It needs to be issued within the last 5 years. In some cases, 10 years is possible, but overall, if you can find one 5 years old or less, that's the best scenario. Again, any kind of previous title policy will do, but it has to be a title policy, not just a binder. Owner's policies are the best because they do qualify for reduced title search fees. And then if they're less than 2 years old, notify your office administrator, because that can definitely help save with the title abstract. Loan policies also qualify. Here's an example of an owner's title policy. What you want to look for are the actual loan policy number. That loan policy number is important. That's what helps show you that it is an actual policy, not just a binder or commitment. That's an example of a loan policy. They can look very different, but these are just two examples. Again, the main key is the loan policy number at the top. That's what you'd want to be looking for. When you get a copy of a policy, not only do we need the jacket, this front cover showing the policy number, but we also need the two schedules. There's a Schedule A and a Schedule B. Schedule A gives the description of the property as well as the owners, and Schedule B gives the exceptions to that policy. Why is it important to choose your closing attorney at the time of writing the contract? It's important because we want to get thinking about who the attorney is going to be so that we can be prepared for the title insurance. If there's going to be a reissue credit, then we want to be able to notify that attorney in advance. So if we can save on the abstract, that we can save the client money for that. Advance notice is critical for reissue credit. And again, go ahead and write it in your contract. Our addendum A that we provide with agent-owned realty contracts does have a blank in there where you can fill out the name of the closing attorney. It keeps everyone on the right path moving towards closing and gets rid of some confusion. And there's really no reason, why you shouldn't select the attorney up front. There's in that addendum A, we also have the ability to select a standard paragraph that says the seller is to provide a copy of their previous title policy. That makes life a little easier. The attorney list is attached to all of our paperwork. On the left-hand side are the list of attorneys. Any of those attorneys will cooperate, all of those attorneys, I should say, will cooperate with us with writing title insurance. So if your buyers will choose any of these attorneys, then just notify your office administrator and we can start the process for writing title. Don't forget to utilize title insurance to sell your listings as well. In today's competitive listing market, anything you can do to make your listing stand out helps. And one thing that you can do is get a copy of your seller's previous title policy. If it's less than 5 years old, that could qualify for reissue title or reissue credit. Turn that into your office administrator and send a copy to Terry Victor. Terry Victor can give you a quote on what that reduced title premium would be, how much you could save a buyer, and then you can put that in your listings. Simply add a remark that would say, want to save money in closing costs, ask about title insurance reissue credit available in this home. If you have the dollar amount from Terry, you could actually put the dollar amount in there. You could save up to X number of dollars purchasing this home. Items that you would need to bring back from closing, the title insurance check, which would be for both the premium and the binder, the notice of title insurance, that's basically what we call our notice form, notice of affiliated business arrangements. As well as there's a disclosure that the closing attorney has the buyer sign that selects whether or not the buyer chooses to purchase title insurance, owner's coverage. There's also a seller's affidavit, which is a disclosure of if they're basically have had any work done recently they haven't paid for, or if they're aware of any defects. Copy the signed HUD statement, as well as your CL 100 and your real estate commission checks. Yeah, as far as whether or not or how the owner's title insurance and lender's title insurance is shown on the HUD statement, it's going to vary by closing attorney and by lender, but in general, there should be a breakdown that will show how much the premium is for the owner's coverage and how much the premium was for the loan coverage. If it's a cash deal, then it's simple. It's just loan or owner's coverage only. If there's a loan involved, the buyer is typically required to buy loan title policy coverage for the lender. The lenders almost always require that. The owner's coverage would be optional, and that's going to typically add $100 or more to that premium overall to have both policies. You should see the breakdown. I guess that answers the question. caution, don't use title insurance as a cure-all. Title insurance isn't perfect. Title insurance does give a lot of protection. It is important, and it can help out a lot. I can't tell you how many cases I've seen come up. Most people say they've never heard of anyone ever needing their title insurance or ever using it. I know of quite a few examples in our local area that have occurred in the fairly recent past. It happens more frequently than you would imagine, and it can make all the difference in the world. Another good example, our housekeeper, who I've known for 30-something years. She had inherited some land. Her great-grandfather owned a large tract in Mount Pleasant. It was valuable property. The family subdivided up to lots. Everyone had their pick of lots. She gave one of her lots to her son. They've known this land all of her life. She's known everything about it all of her life, lived right there next to it. Never thought there was anything that would ever be of concern. Her son built a house on his lot, did not buy owner's coverage, and unfortunately, recently, a neighbor to the rear of the property filed a lawsuit against him and started giving him trouble over access through a part of his lot. Again, this family has known this land, never knew of any issue at all with this land, and all of a sudden, out of the blue, some neighbor has challenged their title to that property, and is demanding access through a good chunk of the lot, which would decrease the value of that home quite a bit. Unfortunately, again, they did not buy owner's coverage. Owner's coverage would have protected them, but they did not do it. So you just never know. The other reason why title insurance isn't a cure-all is that you typically have to experience some sort of failure of title failure, before you have any relief. So a good example of that is the house in Atlanta with the sewer line. Title insurance was there to protect that buyer, but they would only receive any benefit once they had a loss, meaning once the public utility company went in there and cut a hole through the middle of their house, title insurance would have stepped up and paid for them to rebuild the house back. But who really wants to have to go through that? So it is important to be aware of what defects may exist. Every title policy has an exceptions page, which many attorneys don't really explain to the buyers. Most of the time, the exceptions are very harmless, but there could be, something of concern there that needs to be considered. So just be aware of that. And that's it. I don't know if there are any questions or not. All right. Well, again, we'll be posting the information on the website. So if you have any questions, feel free to go back and look at that, or email me at any time. It's just Claude at AgentOwnedRealty.com. Thank you.